So you and Justin have done an amazing job hosting this week. It's good to know you've got a fallback career if you ever decide to move out.
Thanks, Jordan.
Out of crypto. So, no, I think what I wanted to quickly talk to folks about is, obviously initially when we were planning this year's Meridian, we had plans for an in-person Meridian, saw what was going on and kind of quickly pivoted to a virtual one. And there are pros and cons to the experience, but there's been just so much work that's put in by the SDF marketing team, really everyone at SDF. It has been an entire group effort to pull this off. What I wanted to do here was really just, I know obviously after each session, the moderators and the hosts and everyone, we're pushing for feedback on sessions. This is a plug for, we're going to be sending out a broader survey on Meridian to get feedback, to really help influence not just future Meridians, whether they are in person or virtual or both, but even future virtual events. I mean, obviously we're going to be in this spot for at least the next half a year, it seems. And so, I think overall we're feeling good about how this week went. We tried to bring in some broader content as it relates to our theme, while also having a lot of Stellar specific content. Splitting the biz track and the tech track and having networking. We've tried to lighten it up with some of the breaks and other content as well. I know how popular the mug has become, and so Hot Property and the moderators in the chat sessions are becoming legendary figures. So, but yeah, I think we're obviously you mentioned early on. I remember in your opening, Lisa, about how we always really want feedback. We love hearing from people. We really need that, and so I know people get a lot of surveys. We're really hoping just people take the time to let us know what you thought. You're not going to hurt our feelings. What worked, what didn't, half-day format, should we done whole days, all that kind of stuff. So plenty of opportunity to let us know how the week went for you.
Huh. Cool. So what I hear you saying, Jordan, is this isn't just a survey that people will take and that will kind of then get thrown in the back somewhere and never really looked at. You guys really want to understand what people liked, what they didn't, and how we can curate content to more better serve the audience and the viewers and talk about things that people want to hear.
Yeah, I think that's right. I mean, I think it's similar to how, you guys on the ecosystem team work in terms of talking to members of the ecosystem, right? Like, we want to know what's working and what's not. What do you need more of? This pulling off a virtual event was a new, at this kind of scale was obviously a new experience for us. And so, it's a lot of firsts, a lot of stuff that we tried, and we know that some stuff probably really worked and some stuff maybe worked less, and that's okay. So, really just appreciate people taking the time to let us know. And, well, with next year, whether it's in person or virtual or both, which is really kind of what I'm hoping for, we want people to give us that honest feedback.
Okay, cool. Well, don't want to put you on the spot, but before I let you go, Jordan, I feel like I need to ask you if you have a favorite Meridian session. I'll say that mine, of course, was talking with President Ellen Johnson Sirleaf. I also really enjoyed Reid Hoffman's discussion about networks this morning. I thought that was super interesting. So any session that really stood out for you?
Yeah, I mean, the keynotes were great. I mean, I think whether it was President Sirleaf or Dr. Kim yesterday, really kind of connecting what we do at SDF and with kind of what's happening in the real world. On the first day, I thought the tokenization panel was a really good one. And the crypto on every corner panel today, I mean, to see Meltem speaking with such passion for the industry and for driving adoption, it was really kind of infectious and fun to see. So those in particular were really good ones.
Yeah, totally. Well, Jordan, thank you so much for joining us. And I feel confident that we're going to get some feedback to help us make future virtual events even better, although this one has really been incredible. And I guess I'll take this moment to also thank you and the incredible marketing team at SDF for all of the work you put into this event. It's really been quite special.
Thanks. I'm glad that you thought so, and you can keep that mug.
Okay, sounds good. Well, we're going to go to a short break now, and then we will be back. So see you soon, everyone. All right, welcome back, Meridian. Well, the day is really flying by, and I can hardly believe that we're on our last day of virtual Meridian. So we've got a few sessions left that we're going to jump into. But first, I've got the answer to your last quiz question, which is sheep. Both sheep and wheat are used in the Stellar code base to describe arbitrary assets. This comes from a long tradition in trading and is really just a fun party fact that you have now. So next, moving to our next session, which is all about Stellar for merchants. I think it is probably all of our dreams to walk into the grocery store one day and have them ask us cash, check, or crypto when we go to checkout. And these next panelists are working to make that dream a reality. So with that, I will hand it over to Mark, who is SDF's Vice President of Business Development. Mark, thank you for joining us, and the floor is yours.
Thank you, Lisa. And thanks again for Eric, Mary, and Stefan for joining us on this panel. So I thought I'd set the stage for this panel with some developments that happened in the last year that are very relevant for what we're about to talk about. So as many of you know, this past May actually marked the 10th anniversary of Bitcoin Pizza Day, on which 2 pizzas were actually purchased for 10,000 Bitcoin. Now worth quite a bit. I think when I last wrote my notes here, it was 130 million, obviously a lot more now. I think close to $170 million. So that is 2 very expensive pizzas, but also this showed both the potential and the risk in using crypto for daily purchases. And then I think the second thing I'd want to point out is something that happened a little earlier in 2019, where crypto skeptic Felix Salmon from Axios actually made a bet against crypto bull Ben Horowitz. Basically Ben felt that they renewed a bet they originally made in 2014. In 2014, Ben felt that at least 10% of U.S. transactions, for goods in the U.S., goods or services in the U.S. would be going through Bitcoin. And he thought that would happen by 2019. That did not happen, but rather than actually consume the bet, they actually renewed the bet. But Ben made a really interesting point. He said, I'll renew the bet, but on one condition, and that is that we don't talk about Bitcoin, but rather crypto in general. And we don't talk about the US where debit and credit cards are super convenient, but we actually talk about emerging markets like Mexico. And I actually think that is a fantastic starting off point for us in terms of thinking of the potential for using digital assets for merchants. So maybe to start off, I would love to have each of you, starting with Eric, introduce yourselves and talk about what your business does, how involved you are in using Stellar or crypto for merchant payments, and what asset specifically in country you're active in.
Sure. Yeah. Thanks, Mark. Thanks for the great intro. So my name is Eric Kriske. I'm the CEO of Badali. So we're based up in Canada, but we service businesses and individuals globally because of crypto. And we actually started off, I think like probably most businesses in the crypto space, we started off in it because we saw the potential of how Bitcoin could help with cross-border settlement and payments and so on. But we very quickly realized that there were challenges with that around volatility, speed, time to settlement cost as well. And then obviously the places where you can actually spend it. And that's where we've been focusing a lot of our time. So right now we support, we actually pared back a bunch of our assets. We support based on usage. So we supported at one point over 175 different crypto assets for payments. We primarily work with enabling people to buy gift cards, pay bills, and do cross-border remittance using crypto assets. But where we really started to focus our effort and seen a lot of growth is in stablecoins. And specifically now, we've started to work, now that we're starting to see more liquidity in stablecoins in faster settlement chains like Stellar that are lower cost. We've started to put a lot of emphasis in that. So we recently actually rolled out a mobile app where people can do this peer-to-peer and send money to each other anywhere in the world and redeem their balance for gift cards in 150 different countries with over 1,500 different providers. And the incentive there too is money settles instantly and people can use it. So to the previous panel's point, we're removing some of the hops that need to happen. And as a result, we're able to reward users by giving them cash back as well.
That's great. Thank you. Mary?
Thank you, Mark. How are you? So my name is Mary. I am the CFO of Settle Network, and Settle essentially focuses on cross-border digital assets settlements across Latin America. We are live in Argentina, Brazil, and Mexico, soon in more countries in LATAM. We'll share with you later. We provide fiat on and off ramp for many exchanges and wallets. Think about OKX, Bitum, etc. And we also have, together with Stellar, all of the anchors in Latin America. So far, Argentina and Brazil are live, and we are launching Argentina and Brazil stablecoins.
That's great. And obviously very focused on supporting Vibrant, which is used heavily in Argentina.
Yes.
Great. Thank you. Stefan?
Yeah, thank you, Mark. So my name is Stefan. I'm a co-founder of Coinquest. And yeah, Coinquest is basically an enterprise crypto payment gateway, and where we provide a solution to online merchants and e-commerce shops to accept cryptos from their customers and directly settle international currency, like for example, US dollars or euros, right? On our platform, we do not only provide actually the financial transaction itself, but also quite a number of tools to facilitate accounting and declaring taxes for the merchants. So think about questions they might have, like how do I account for incoming crypto payments? Where do they come from and what are they used for? And how do I actually handle all kinds of payment exceptions that might arise when accepting crypto, right? On top of that, we also provide protection from currency volatility for the merchants. Like just think about a short or very simple example. If a merchant has an online shop, sells a t-shirt for $20 US dollars, and the customer decides to pay in Bitcoin, then the merchant will receive $20 US dollars guaranteed. Yeah, but what else? I mean, we've been live for about 6 months now. We're able to establish some business relationships. It took us actually quite 2 years to build a product. We had a very strong focus on building a very solid core product and a payment engine, because we think when it comes to payments and financial topics, this is really very important. And yeah, technically, we are completely built on the Stellar network, and we utilize anchors for US dollars, euro, Nigerian naira, and Brazilian real on the settlement side, and most common crypto assets like Bitcoin, Ethereum on the consumer checkout side.
That's great.
Yeah.
Go ahead, please.
No, I just want to basically sum it up. If you think what is our main goal, then I would say that our goal is to take away the uncertainty and the risks that merchant and decision makers might have in terms of accepting Bitcoin, and help them embrace technology to offer a payment option to those that actually want to pay in an alternative way. Think about millennials, and those that need to do so, like the unbanked and underbanked.
Yeah, and so maybe if I can ask you, and maybe we'll just go the other way around, and Mary and Eric, I'll come to you next with the same question. I would love to understand, in your go-to-market, you've been going to market over the last 6 months, and I'm sure you've had to ask the question and answer the question of why. Why would a merchant want to use this versus their existing point of sale system? Why would a consumer want to use this particular rail? And I'm wondering what your journey has been there, what your experience has been, and how we can, in general, drive more adoption, considering there's this chicken and egg dynamic.
Yeah, thank you. It's a good question. I think we're still in the experimental phase here, definitely like collecting feedback actually from the market. I think the message to the merchant is definitely that there is an upside on the marketing and business side. Also, when you think about upcoming demographic development, I think that merchants can increase their revenue by catering to new target groups. Think about those that are born in the digital or into the digital and mobile age and grown up actually with their mobile phone, use services on the mobile phone, and also financial services and banking. For them, it's just natural to pay digitally and with crypto. Yeah, there's also some research has been made that those who pay with crypto actually have higher average order volumes, which is beneficial for merchants. And yeah, there are other economic factors. Think about like a merchant could increase the prepayment rate. We did actually in some kind of annual reports from payment providers where they see that as a strategic benefit for the business to increase that rate. At the same time, basically reduce chargeback rates and reduce transaction costs, yeah, in general.
And what are you telling your potential merchants in terms of reduction in transaction costs? It seems like that's a fairly significant selling point.
Yeah, so basically at Coinquest, we charge, depending on the transaction volume, like 0.5 to 1% a fee. And this is obviously considerable less than what they pay for more traditional payment providers.
Right, which is, if I understand correctly, about 2.5 to 3.5%, depending on the provider, right? So that's a fairly significant change in margin. That's especially in a low margin retail business. Thank you. Mary?
Yeah, from Latin American perspective, we have seen a little bit different reasons why merchants and users want to access crypto, right? And use it for payments on a daily basis. So it's more, the incentive is not so much on conversion or getting more, you know, from a marketing perspective, as Stefan said, which is, it is quite right in other places, in particular in Latin America. We have a contextual situation from an economic and political standpoint where we see a lot of inflation, specifically now during COVID. COVID has been triggering a lot of people to look for alternative ways of sending money to and from abroad. Latin America in particular is one of the largest cross-border and remittance markets in the world because you have so many countries lined up next to each other with kind of the same culture, the same language. From Mexico to Argentina, it's either Spanish or Portuguese mainly. And then the incentive is more driven towards, I need to send money to my family, number one. Number two, merchants saying, okay, now people don't have access to banks. Banks have been closed. Lockdowns have been very long here in LATAM. Banks have been closed. So people are trying to find a way to use their cash and digitalize it in any way they can in order to use it as they would in, you know, purchases, online purchases, etc. We are not so used, and this is a great point you brought before. In the US, we have Venmo. Hey, send me money from New York to California, I'll Venmo you. Here in Latin America, we don't have this, and we don't have it even in the same country. And with banking restrictions, it's more complicated. So the incentive comes from this side, right? COVID, inflation, economic and political volatility, and all of these banking, restrictions and all of this regulation.
And I'm wondering if there's something about the informal economy we should think about, especially in, let's say, the Latin American markets, right? Where often in the US, we think of point of sale transactions, we think of gift cards, we think of a terminal, we think of going into a store, but really a lot of transactions in emerging markets happen in stalls in the market where people are just using mobile devices, right? And so I wonder if there's an opportunity there, especially considering people have value in their wallets from remittances.
Yeah, absolutely. And also, let me give you a little bit more background. In Argentina, for example, you can pay Uber with cash. It's such a cash-based economy that if the pandemic caught you with a lot of cash and banks are closed, then your other option is coming to Settle Network, or, we are one of those where you can actually send fiat money and we can turn it into crypto stable coins so that then you can be more free to move around money, right? You can choose whether you want to pay Uber in cash, and everything is very cash based. So having this little options here and there right now during pandemic to digitalize money in terms of crypto has become so prevalent. And right now, with all the distrust there is on banking rails, on banks in general, on the financial institutions, then all of this the informal economy, people that don't have bank accounts are either just doing the leap, just taking the leap and going from cash to crypto, not even bank accounts.
Yeah, and I think we saw the example in India with demonetization, where people adopted Paytm very quickly because they had to do day-to-day transactions digitally, and they simply couldn't get access to cash. So I think that's a fantastic point. Eric, so I'd love your point of view on what the use cases are and how we actually break the chicken and egg dynamic.
Yeah, I think, to what Mary and Stefan said, a lot of it is, we've thought about a lot of the same things and heard and seen a lot of the same things. I think ultimately it does become a chicken and egg problem though, right? Because even if I can send money to somebody else, and this was Bitcoin kind of enabled this better peer-to-peer cash-based system, and it's had its challenges in terms of cost and efficiency and so on. But that was the very first stab at it that I think has worked really, really well. But the challenge that we still see is, unless it's cost effective and easy and better than the current alternatives, regardless of where you are in the world, to actually use that to pay for the goods and services that you need to pay for in order to live, particularly in these cash-based economies where people are going, the hand-to-mouth kind of model, or where people are earning on the day, spending it through the day, earning again, spending again, and don't necessarily have a bank account. That's a tough nut to crack. And our approach so far has been, like any marketplace, you need to build up one side and build up the other side. I think to what Reid Hoffman has spoken a lot about is, how do you crack those network effects? And part of it is, on the supply side. And that's where we spend a lot of our time working with merchants to offer something familiar, particularly global merchants, where it's already been hard to work with them within, if you're branded as a crypto business, to enable people to convert these stores of value, whether it's Bitcoin or a stable coin running on Stellar, to a gift card that they can redeem very, very easily and quickly. And now, as a result, we had to build out our own payment stack, very similar to Stefan, over the last few years, in order to remove that volatility for the consumer and for the merchant and ourselves as well, and improve the efficiency gains there in terms of even accounting, like all of these barriers we've had to deal with ourselves by being our own merchant kind of in the middle of this process. And so now we're starting to bridge into working directly with merchants and offering payment solutions and prepaid solutions so that we can offer kind of the same thing, but on a more efficient digital level. Because I think there'll be some sort of inflection point where you have enough supply or enough places that you can spend cryptocurrency efficiently and easily, that all of a sudden it happens very slowly, and then it'll just tip, because it will be useful for people. And this is typical with any adoption cycle or adoption curve anyways. And we're still very early in the crypto adoption curve, but I think you're seeing bits of that now, where as people are layering on these ability to, with Settle Network, adding stablecoin partnerships and the ability to settle to your bank or settle to cash or vice versa, and giving people this optionality, we'll start to see it really accelerate, I think, over the next few years. Because ultimately what it comes down to is optionality, and that's where we've been, where we think crypto really, outside of the efficiency benefits, and what got us into it and excited about it was seeing the problems and currently still even some of the people we employ, the problems that they're having in Latin America and Africa around trust, and even just the choice of what currency to transact in, what payment method to transact in. That's incredibly powerful. And right now that's a barrier to people being able to contribute to the global economy that I think needs to be solved.
That's great. And I have one more question for you, but I wanted to let the audience know that I would love to ask your questions. And if you go in the Q&A tab on the top of the screen above the chat and ask your question, I'll be able to see it. I won't be able to see the questions in the chat, by the way. And so, yeah, my question for you, Eric, is you're talking about how there's this potential network effect, but you are in this fairly mature economy, right? You're obviously have a lot of activity, if I understand correctly, in developed economies. So what are the numbers? Like, why would a consumer adopt your system? Why would a merchant adopt them? Do they save money? Do they make more money? What's your pitch to the consumer and the merchant?
Yeah, I think, our pitch right now, where we've seen most of our growth and where we've spent most of our time is in enabling people to convert cryptocurrency, so these other stores of value, to more, I would say, traditional stores of value. So whether that's cash or, in this case, prepaid stored value credit at businesses. And so we knew kind of going in that the cryptocurrency crowd, let's say, myself included, are early adopters of technology, but also acutely aware of the financial ecosystem a bit more than the mainstream, and also tend to face some of these challenges. So the pain is a little bit higher for some of these people. And so a lot of the people that we service, like a lot of the volume that we see, tends to be remittance or people buying because, they've earned cryptocurrency in some fashion, whether they've earned it overseas by working abroad via, Fiverr or some independent platform, or they've made it off of earning interest in DeFi, or they are speculating and making money off that, and it's a quick way to convert that's cost effective. So, and to lock in those gains, or in some cases lock in those, the downside as a hedge. So that's where we've seen most of it today, but where we're really, like, over the last few years, but where we're really pushing now, I'd say, with the new mobile app, is bringing this more to a mainstream audience. And that required a lot of work, a lot of trust, a lot of technical development as well, to make sure that the system works well. Because what we've started to see now, especially over the last 9 months, is that people have now become dependent on our service to pay for, food. And I'll give you a quick example. We even had one person during COVID who was trapped overseas. His wife was in the hospital delivering their baby, and he used our service with Bitcoin to convert to a gift card, an Amazon gift card, so that she could get the supplies that she needed delivered to the hospital, because she didn't have anybody, including her husband, to be able to help her out. And I think those are it blew us away, because those are the things that you realize can be achieved by now having a more open, more efficient, accessible system, and giving people
I totally
choice.
agree. Yeah, I think that's a fantastic real world story. Mary, we have a question from the audience for you. Can I buy USD stablecoin with ARST stablecoin?
Yes, you can. And I want to talk a little bit about, actually, Eric, is funny you mentioned this particular case. We've had not a similar situation, but here in Latin America, we're receiving a lot of immigration, a lot of people from Venezuela coming to look for a job here in Argentina. I'm in Argentina right now, and they come with crypto. A lot of people come with crypto that they've gained somewhere else. Either they work remotely, et cetera, and we have been providing this off-ramp for them. But now with Vibrant, and I'm very happy to talk about this, that Mark previously mentioned, with Vibrant, now having the app for consumers and having the option just to bring it to ARST and keep it digital. It's a great way for them just not to depend on opening a bank account, which are closed, or being an immigrant, it's very hard to open a bank account. I lived in London, in the US, and in Paris, and it's very, very hard to open a bank account. They need either the proof of address, but then how do you get an apartment without a bank account? So it's, again, another type of chicken and egg problem that you have. And yeah.
I wanted to add something to that. I think the thing around choice as well that we've identified is really important, particularly in Argentina, Venezuela, and other countries where they've faced distrust in government or hyperinflation, or the banking system, is what we feel is really, really interesting about cryptocurrency is that, sure, we have other crypto assets that people may say is a hedge against inflation, but ultimately, when we've done a bunch of research and spoken with people, right now, they're still looking for US dollar, because they're looking for safety in comparison to their existing currency. And what crypto enables now today is the ability for people to have a multi-currency bank account where the funds, even if they're backed one for one, like with Circle, they're stored in a more trusted, more regulated, more stable government environment that they can rely on compared to their existing government or financial infrastructure, and particularly one that has more liquidity. And that is also super important because now effectively in some of these markets, anybody with a mobile device now can have a multi-currency offshore bank account, which is a mind-blowing thing because typically that's been only reserved for the ultra wealthy.
Yeah, I wanted to bring it to you, Stefan, on that point. I'm wondering, I mean, you obviously operate, it seems you operate with USD, Euro, and Naira on Stellar with your product, right? Which is very impressive. Do you see that dynamic where people with multi-currency accounts are using this? Do you know? And also, I'm just wondering more in general, what do you see as the biggest barriers and accelerants to the growth of your business?
Well, in terms of barriers, I would say, and I think we have heard that a lot during this event already, that there's actually quite still unclear regulatory requirements for everyone, for us as a company, as a crypto company, but likewise also for the merchants. So we have heard voices from merchants who say, okay, we're not looking into accepting crypto at the moment, because we don't actually have certainty on the regulatory side, and we do not know what will actually our bank do if we receive our funds from a crypto exchange. Will it actually close the bank account or not, right? So yeah, I think what we can do, we can try to educate and showcase the benefits, but it takes quite a bit of time and efforts. And yeah, on the regulatory side, I think there's quite some things to do still.
I can imagine. And do you see mobile money having a big impact on your business?
At the moment, we actually, let's say like this, we focus very much on the merchant side. So we actually see basically where the money is coming in, but basically we cannot really say basically from what wallet or it's coming from. Yeah.
Right. And so maybe we have about 2 minutes left. I just wanted to close with, the same bet that, Felix Salmon and Ben Horowitz made earlier on, which is, will 10% of all retail transactions go through crypto in the future? And rather than asking for a specific point in time, I was just going to ask, well, rather than asking on a specific date, I would love for you to tell us, what year do you think over 10% of retail transactions will go through crypto in your specific markets, and just name the market? I'll start with you, Eric.
Well, I think because we service everything globally, we're like maybe not the best use case, but I would say, or picking a specific country is a little bit tricky, but I would say definitely to the point that we've already made is that the highest impact and probably the quickest adoption is going to be where it provides an order of magnitude improvement and gives you better trust and optionality and lower cost and all these things.
Got it.
I think it'll happen in the next 5 years. I think, like I said, right, it'll happen slowly and then all at once.
2025. Okay. Mary, do you want to comment on Argentina?
Yes. So in particular, like in terms of market, I would say definitely in emerging markets, number one. Number two, I think that I would have done the bet with stablecoin. So I don't think as the deflationary model Bitcoin has from a purely economic perspective will never, people will not use Bitcoin for these kind of purchases. So if we could change the bet and do it on stablecoins.
Sure.
Yeah. So then maybe, I don't know if in 5 years, but hopefully in 5 years.
5 years. All right. 2025. Stefan?
Yeah, I would agree also on the 5 years, but however, not for Germany or the European market, but probably really also in some emerging markets. So.
Yeah,
that's great. Well, thank you very much for joining me. And I learned a lot on this session, and I wish you the best of luck with your businesses.
Thanks so much, Mark.
Thank you.
Bye-bye.
See you, Mary. See you.
Have a good Meridian. Bye-bye.
All right. Well, thank you, Mark, and all of our amazing panelists. I thought that was a really interesting discussion. And I think personally, I would agree with Mary as well. I could see a lot of retail to merchant transactions going through stablecoins in the next 5 years. I'm certainly looking to hold on to my Bitcoin. So, but thank you. And it sounds like there's some really promising solutions being developed, even in our own ecosystem. So we've only got one session left in Meridian, which is crazy. Make sure that you're giving us our feedback in the feedback